Jamie, what do you have for us today?
Okay, so a little bit of news. So there's been a lot all over different news sources about mortgage forbearance. And we just kind of wanted to break down what that means and just talk a little bit about maybe some facts that you may be hearing and any questions that you might have about that, because there's a lot kind of flying around out there, right?
Yes, definitely. It's so tough right now because we get information from so many different sources, and then it seems like the information is changing on a daily basis.
Yeah, everything is conflicting too. You read one article and it may say one thing or make you think one thing, you read another and you get a different impression. So basically, what the CARES Act, and I'm sure, a lot of people have been hearing about the CARES Act lately. The CARES Act is allowing homeowners to request 180 days of forbearance on their federally backed mortgages if they request it. So they can request that if they need it. So there's a lot of things that you need to know about mortgage forbearance. First and foremost is who backs your loan, who you make your mortgage payments to. That's a really important key, because what makes up this forbearance could really change based on who your mortgage provider is. So who you got your mortgage through doesn't mean that it's still who you're paying your mortgage to. Banks sell off their loans, so you need to really check and make sure that you are contacting the right bank and the right institution when you're looking into, if you do need to look into this option.
So let's look at the numbers. Okay, so if you are not able to pay your mortgage right now, this is where the forbearance takes place. If you can pay your mortgage, we strongly encourage you to continue to pay it, because there are some downfalls of this mortgage forbearance, and that's what we wanted to tell you about today. So a mortgage forbearance is if you aren't able to make your mortgage payments, you want to contact your service provider, which is, like Jamie said, on your mortgage statement. So you're going to contact them and request to stop making your mortgage payments for a certain amount of time. Now, typically we see mortgage forbearances for 90 days, but the CARES Act has allowed you to request 180 days of forbearance, meaning you wouldn't make your payments for that 6-month period. Now, there are several drawbacks to doing this.
Yes.
Jamie, what are some of the drawbacks we're seeing?
Well, it really depends on, who your mortgage provider is. So there's a lot of things going around out there, and that's why it's so important to talk to your actual mortgage provider. But, this is not free money at all. So if you can pay your mortgage, you need to pay your mortgage, because that money is going to become due in some way or form, whether that's a balloon payment at the end of those 90 days. So in other words, what a balloon payment is you owe all of those months that you didn't pay all at once in a lump sum. So that could be very financially detrimental, especially if you've been out of work or something. So, if you can keep making those payments on a monthly basis, you should. Some other things that have been thrown out there of options are you can kind of redo your mortgage so that you change your monthly mortgage to kind of account for those months that you missed payments. And then there's also a third option.
It was a loan extension.
Yeah, so you put on the back end, right?
Yeah, so you can take the delinquent balance. So let's just lay the numbers out. Let's just say, for instance, your mortgage was $2,000 a month, and you've asked for a 90-day forbearance. At the end of that 90 days, they are going to ask you for the balloon payment of the $6,000 that is owed. And then they're also going to tack additional fees on, because they're not going to do this out of the goodness of their heart. So let's say those fees are $1,500. Now you owe $7,500 at the end of this 90-day period. And like Jamie was saying, if you can't pay that $7,500, that's when these other options take place. Like, they'll add it to the end of the life of your loan, and then you'll pay the additional interest onto it. They'll also allow a repayment plan. So they'll take that $7,500 and maybe give you 6 to 12 months to pay that, but you're then paying it on top of what you already have to pay.
Exactly, exactly. And all of these options we're saying, like, these are options that you have. It really depends on your lender. So you may only have the option to do the balloon payment lump sum. They may only give you the option to add it on the back end. It just really depends on your lender, and if they're even offering this. So you need to speak with your lender, but we can't stress it enough. If you can pay your mortgage, you need to just keep paying your mortgage, because there are so many unknowns with this program. You could be in a worse financial position at the end of it by taking a few months off from paying your mortgage and then being hit with additional fees and having to pay things in a lump sum. So really talk, if it is a serious concern for you, talk to your lender. We can get you in touch with a lender to get some questions answered, but call your actual mortgage provider and see if it's something that makes sense for you, or that, is something that's necessary.
Exactly. And make sure you read the fine print, because you are going to have documents that you have to sign, and make sure you read through that extensively. And if there is a balloon payment at the end, it's going to lay that out for you. So you're going to know in 90 or 180 days what that balloon payment is going to entail. So make sure you look at that. And like Jamie said, make sure that mortgage is the first thing you pay. It's really going to be important to stay on top of that through the next couple of months.
Yeah. All right. And again, we can't stress this enough. We are not lenders, so talk to your lender, or we will get you in touch with the lender to get the specifics. And we will talk to you next time.
Yep. Catch you next time on Dealing with the Deckers.